Hey everybody, welcome to the video. Thank you so much for joining us today on this video. So today I'm going to be answering a question from one of our viewers that wrote in a question, and I thought it was a really great question because I just recently had done a video on how to add chart labels to your chart. So he writes in this question, and Richard, I appreciate you sending in this question, and I appreciated our dialogue that we've had in the comment section. So Richard asks, I added the IV percentile to my chart, and the numbers don't match the implied volatility percentile as displayed in the options chain for any given stock. Why? That's an awesome question, and I want to talk about that today. So let's jump right in, you guys. Let's talk about what this means, because when we're talking about implied volatility and implied volatility ranking or IV ranking, there's so many numbers out there as an options trader that can really get you bound up and wondering what numbers I should be looking at as an options trader. So let's talk about that. So I did a video a couple of weeks ago that talked about adding chart labels, and we're specifically talking about this chart label right up here in the top left hand corner, which we're talking about that 31.2% IV percentile. Now the question that Richard had was, I added this chart label, but it doesn't match any of the numbers that I see over here on the right hand side of the trade tab. So you remember on our chart label we had 31.2%, but over here on the right side we have 11.2%. So what is the difference, and why aren't those the same? So let's go back over here, look again at the chart tab, and you can see that we have 31.2% implied volatility. And what that really means is that is where, based on the last year, looking back 252 trading days in the year, implied volatility right now is at the 31.2% level. So basically 31.2% of the time implied volatility, whatever that is, has been less than it is right now. If implied volatility is the highest it's ever been, this number right here is going to read 100%. I should say the highest it's been in the last year. So if we have a really high implied volatility, we're looking over here at this options chain. I don't know what that highest implied volatility has been, but we can look right here. The highest implied volatility in the last 52 weeks has been 0.152 or 15.2%. So you can see right now, these over here are 11.2 to 14 is the highest one here. So in the last 52 weeks, the highest the implied volatility has been 15.2%. Now that doesn't have anything to do with this chart label right here. What this chart label is saying is that in the last 52 weeks, let me do this. Let me pull up I'm going to pull up a style here, so bear with me just a second here. See if I can pull this up real quick. What I want to do is show you guys, and I've shown this in another video too. I'll link that up here in the description of the video. But looking at the IV ranking for GLD, you can see right now, here's that number, the 31.3, 31.3, 31.4. Basically the same number right here. It's just rounding it up to that next number. So this is implied volatility percentile or implied volatility ranking. So if we look back in the last 52 weeks, when we look back at our chart, we are 31.2% of where we have been in the highest implied volatility. So the highest implied volatility, looking back from where we are today all the way back a year, would be this number right here. And you can see that this is right here at 100%. So this is the highest it's ever been in the last 52 weeks. And right now we're at 31.2% of where the implied volatility has been in the last 52 weeks. Now, if we're looking right here at this implied volatility, looking at implied volatility, we can go back to our trade tab here. Now, where I'm getting these numbers is in today's option statistics. If I open that menu right here, you can see that there again, right here's our current IV percentile, that 31%. That's the percentile. That's the ranking. That's where we are in the last 52 weeks of where we are in regards to the highest implied volatility that we've had versus the lowest implied volatility, we're right at 31%. Now, if we come down here to these numbers right here, and we look at this 52-week high and the 52-week low, 0.15 and 0.09, if we come back over here to our chart and we come back over here and we look back 52 weeks, the highest that we're going to see is that 0.15 right in here, and the lowest that we've ever seen is going to be right down here around that 0.09. So looking back those 52 weeks, let's see right here where February, we come back in here to February here, you can see that this is the highest we've been, this is the lowest we've been on the implied volatility, and then right now we are at 31% of the highest high and the highest low. And that's what this number is right here, 31%. It's just giving us a tracking of a ranking of where we are in relation to the highest implied volatility that we've had over the year and the lowest implied volatility that we've had over the year. So we can add this, this indicator on our screen here, or we can just add this chart label right up here that tells us, hey, we're at 31.4%. So when we look at these numbers over here on the trade tab and they're sitting here at 11%, we could look at that and say, well, is that a high implied volatility or is that low? Well, it's not the highest it's been all year. We're 31% of where we've been all year. What these numbers represent is what the current implied volatility is in this series based on option pricing for option buyers who are buying out of the money calls and out of the money puts. They're driving these numbers right here. So what this number is saying right here, this 11.23% is a 1 standard deviation expected move annualized over a 1-year period. So I know that might sound a little bit confusing, but really it just puts a little bit of context when we're looking at each one of these series of options here. Excuse my drawings there. When we're looking at each one of these series of options, you can see, immediately which options chain have the highest risk. So that's what that really is right here. That's just the annualized expected move. And it puts some context, again, it puts some context around which option series has the most risk in it. These numbers right here, this 2.91 or 2.91 plus or minus, is what the expected move is, the 1 standard deviation expected move for this series of options. So right now, if we're looking at the 15th of March 2019 series, we got 23 days out till expiration on that one. The expected move, or the 1 standard deviation expected move, is $2.91 plus or minus. So this is really helpful when we're selling options and we wanted to know where that expected move is, and if it's outside and we wanted to sell those options outside that expected move, we could definitely get an idea where that 1 standard deviation move is based on option pricing. So I hope that's helpful to help you understand, Richard, or anybody else out there who's wondering what this chart label is here when we're talking about IV percentile and what actual implied volatility is on these options chains based on the associated risk in these options chains. So let me take it a step further. Let me take you into let's look at some options that have some earnings coming up. And you can see here, if we look at Etsy, Etsy has an implied volatility ranking of 69.9%. Now, if we come down here and actually look at what the implied volatility is overall, we're looking at 0.7255 or 72%. We are not at the highest we've been. We're not at the lowest we've been. We've actually been higher up in here. Earlier this, at the end of last year, we were a little bit higher, and we've actually been a little bit lower back in here. So we're just currently at about 69% of where we are. So looks like earnings is coming out on the 25th, so about 5 days away. So if we come back over here in the trade tab, let me close this one up here. You can see right over here in the trade tab, this earnings series right here has 23 days. And so those earnings, or I'm sorry, this options series has 23 days left till expiration. So earnings would fall inside of this options chain. And you can see that implied volatility on that specific chain is actually 78.43%. So what that's saying is, if you look right here at all and compare it with the rest of these, you can see that that is definitely sticks out a little bit higher than the rest of them. You can see that this denotes a little bit more risk here in this options series when we're talking about the March series, because earnings is falling inside of that series, which is going to create a little bit more speculation, more option buyers buying out of the money calls, out of the money puts, which is driving those option prices up. And that shows that there's more risk in this option series than in the rest of them. So, this, like I said, this just gives us some context around what the option buyers are speculating, or what they're implying on the market is going to happen. So in this series right here, we're just implying that there's going to be a little bit more move. And when you're talking about move, depending on your position, that could mean risk, right? So we're talking about a little bit more risk in this option series than in the rest of them here. And so when we're talking about looking at these different series here, this just gives us an idea which one has a little bit more of risk involved in it. If you guys have any questions on, this IV percentile, this IV ranking, implied volatility, all those good things, post them in the comment section below. Love to hear from you. I love talking about this stuff with you guys, and the dialogue that we have in the comment section. And I hope it's helpful to you guys. I really do hope it's helpful. I remember in my journey when I was learning to trade options, there was so much information out there, and a lot of information that you got was not really conclusive. And so hopefully these videos are kind of bringing it home for you, making it a little bit more easy to understand, because options there's a lot of moving parts. But I'm telling you guys, if you put in the time and you learn this stuff, options can be your best friend in the marketplace. They can help you do well, but you got to put in the time. Too many people don't understand the little nuances like this IV rank, and they buy options at the wrong time. They're selling options at the wrong time, and they wonder why they can't make money trading options. But if you put in the time and you understand that stuff, you will be successful trading options. So thanks so much for watching, you guys. Again, my name is Kirk with Tactical Options Trading. If you think this video has been helpful, I hope you'll consider subscribing to our channel. Thanks so much for watching, you guys. We'll catch you on the next one. Bye-bye.